I think the idea of generational wealth planning, we wouldn't be able to do it without giant long-term teams or the tools we have today. Welcome to the third season of Land and Everything Else. My first interview of our third season, and I can't think of a better person to kick this season off with. So we're here with Ilya Zlotnik from Vivaldi and a previous guest on our podcast. Great chemistry, had a great time together. And so we're going to sit down today and we're going to talk about so many fun things. And we're going to open up this conversation with one about AI and wealth management, because we're both so excited about that. But thank you so much for being here.
It's a pleasure to be here. I feel very honored that this is your first episode of the third season.
It is, man. We're pumped. We're going. And, we set this podcast up originally to support a number of public-facing classes on the Coursera platform. And we used the first two seasons to build it. And now here we are, and we're a little more freeform. Right? Because we kind of built what we needed to build. And so now we can be a little more freeform. But thank you so much for joining us on Land and Everything Else. And so let's hop into AI and wealth management. First up, is the financial advisor dead? We've seen a lot of people ask this question.
Absolutely not. If anything, it's elevated.
How so?
Because the power that AI brings to advisors and getting them out of the muck, but into more higher level thinking, if done right, the leverage that AI can provide is very exciting. And we're only scratching the surface as to what it can provide over the long term.
Oh, I can't agree with you more. I think one of the trends that we've seen in the world, and I am borrowing from both Kitces and Edelman, but I do believe, and I've kind of pursued this line of thinking as well, and I'd like to get your thoughts on it. You know, when we both entered this industry, I was a salesman. Right? Mm-hmm. When my first job was I was taking my CFP, I was a salesman, and I sold A shares, I sold annuity contracts, and I sold life insurance. Right? And so I sold them to, kind of worked with a more senior advisor, but that was my job, and I was compensated when products would land. I don't know about you, but that was like my intro to this business. I started the same exact way. And so what I think the evolution here, and Hugh, I'd please add your perspectives as we go through this. I started in the late 90s, early 2000s is my age point coming in, and it was a lot of A shares, and it was a lot of sales. And I think we were comped on that, and it was a good entry into the occupation. But in order to sell a product, there was the prospectus you had to go over. There were the forms you had to fill out. There's so many forms. I just remember form after form.
A lot of forms.
If you rolled from an IRA into another IRA, there were forms. If you rolled from a qualified plan, God bless you that money would show up like when you needed it to, where you needed it to. And I just remember there was so much back office. You weren't paid on any of it, right? You were paid when the product landed, but you weren't paid for a lot of the work. Right. And I think that disconnect was just part of the game. It was part of financial planning back then. And as we've seen the world move forward and we've seen better fintech tools, our students today that graduate, sometimes they get jobs that are kind of salary jobs, like at a firm like yours, right? And they're using these fintech tools and they're able to touch dozens of more people, a multiple from when I touched when I started, right?
Yeah.
Because you would have a meeting and then you'd like enter your notes into Access, right? One of the old database tools. And then you'd use some clunky elevated spreadsheet with more graphs, and it would take forever to do anything, right? Now, I mean, you can serve hundreds of clients. I would say probably more than that with the tools today. So I don't know what you want to add into that, but I'd love to get some thoughts.
Absolutely. I mean, well, you got into the industry, you said the late 80s, early 90s.
Late 90s.
Late 90s, okay. Yeah. Well, I got into it in the mid-2000s.
Okay.
And that was kind of when that transaction A-share business was dying.
Yes.
So it was a good experience to kind of experience that model, but I'm glad I didn't stick around very long. But also it was a very good experience in the sense that, they just kind of throw you into the fire.
Oh, they do.
And then just go out and figure out how to find clients, friends and family, fish bowls, whatever you got to do to win business. But you're right. I mean, everything was manual back then. Everything was paper form. Technology was kind of very nascent, very early on. And nowadays, the stuff that we can do with technology and DocuSign and AI. Just the other day, I had a client reach out to me and ask me about their estate plan that we help put together in accordance with one of the outside estate attorneys that we work with. And back in the day, either I would have had to go through the entire estate plan.
Oh, sure.
It's like 50 to 100 pages.
Oh, yeah.
Or at least have my associate go through it to figure out the key things that the client needed to know. I literally put it into Copilot.
Yeah.
So we have a platform. Everything is Microsoft that we use. So we use Copilot, which runs on ChatGPT. And I gave it a little bit of context about the client, what I was trying to solve for. And within a few seconds, it completely spat out an amazing structure and response on what the client wanted.
Right.
So what would have at some point either taken me 1 to 2 hours to do, an associate 1 to 2 hours to do, boiled down to effectively 1 to 2 minutes.
And I'll add in that your expertise in the field allows you to look at that output and decide if it's garbage or good.
That's right.
So like there's a lot that goes into your training and building up so that this tool is effective and efficient.
That's right.
Because if I gave that to a 22-year-old planner, it would just be like Copilot says, right? But I think as you have more experience in estates, I think that's important.
But to add to that, not only that, they might not understand it. Not only am I able to synthesize it with my team, but I'm also able to give it to a client in a way that they can understand it. Yeah. Right?
Yeah, well, exactly.
And that's maybe the most important part.
And I think that the time speed up is one of those things about AI that I find very valuable. You know, to me, we start to see AI's value in redundant tasks, right? And where we started using AI in redundant tasks, it could be for something like note-taking in a meeting, right? Mm-hmm. Text-to-speech, then clean up the text-to-speech, then give me an outline instead of a blob.
Yeah.
And that was like our first kind of, well, this is a redundant process. So we'll form AI tools that are good at that redundant process. Low level, right? But in wealth management, note-taking, kind of, I think the first AI like universal task. But now we're starting to see higher level redundant tasks. Like, for example, in insurance, we're starting to see underwriting. Where underwriting today, more and more and more, you start to see, okay, well, we've got this UL or whole life or term policy up to X million without a health exam. And what that is AI evaluating mortality, morbidity for people, looking at trends, looking at, family units and age and all that. If they smoke, their weight, their height, the drugs they're on, and AI making more sophisticated, redundant task determinations. So that's where I see we've started to see AI in wealth management and in financial planning take some of those tasks that were time consuming that we do over and over again. And we're starting to see these tools really shine in those spaces, right? And so to me, that's where you've seen AI in wealth. And so back to what you said on estate and trusts and those sorts of things where, okay, it is redundant to review wills and trusts, right?
Yeah.
And there's some fintech tools that have that ability. There's 2 or 3 I can think of. And one of their names escapes me at the moment, but that help do that. You've got AI tools that can also do that. But I think, how do y'all deal with the privacy element of it?
Yeah. I mean, for us, when it comes to AI, we built everything on Microsoft.
Right.
So, there's a lot of AI tools out there.
Sure.
There's outside ChatGPT that I might use personally on my phone. Yeah. The way we look at privacy is anything that is client related has to go through within the systems that we use.
Got it.
Which then has its own guardrails.
Yeah. So you've developed the systems to keep it like within the Vivaldi world.
Yeah, because it's private wealth management,
of course it
security and sensitivity to our clients' private information.
And when AI first came out, I think that was one of the challenge pushbacks you got. Was like, you're throwing it out on the web. And you're like, well, no, not today. Today we can actually scale it at a firm like yours, and we can say, all right, we've got the box in the firm. We can use the tool in the box, and the tool saves us time monumentally. Yeah.
So when it comes to AI, there's so many things that I'm thinking about right now, right? Like you said, low-level tasks, and there's a lot that we can do, and I'm going to mention that and what we're doing there. But I actually look at the estate planning stuff, and what they're doing there is high level.
Yeah.
Like really high level,
we have come
thoughtful
a long way.
Processes.
Yes.
And then the other thing is training my team to integrate that into their everyday functionality. So like once a week, I meet with my team and I'm always asking them, what have you used AI for recently?
Oh, I love it.
Right. So I'm trying to push them to use it more.
What are some of the things they're using it for? If you can share.
Yeah, absolutely. So, I mean, I honestly don't send an email anymore without putting it through AI.
Okay.
Just say, improve this email.
So does it speed it up, make it more efficient?
It just makes it sound better. It flows better, removes all the errors. Now, I'm not saying don't look at it and
no, I mean, but you wrote it to begin with.
I wrote it to begin with.
Like you looked at it.
Yeah,
Let's be clear.
Exactly. And then I'll put it through AI, and AI just can soften the tone or add something that I didn't think about or just make it more fluid.
Sure.
Right. So I make sure they do that. But then, for example, a client just sent over their documents. They want us to analyze the performance from another advisor. I said, just put that into Copilot. And now Copilot has like 4 different levels.
Okay.
They're like basic, and then they have smart.
Okay.
Which kind of utilizes all the different functionalities. They say, use smart, put it into Copilot, and then give it the right context as to what we're trying to accomplish, and let Copilot come back to you with their initial thoughts on what's going on with that client portfolio.
Well, and I think it gives you perspective that you as a human may have missed.
Yeah.
Right. And I think that helps all of us. I know one of the experiences I got to have, I'm always one to jump in a last minute speaking role. Like I've let go of hubris and ego.
Yeah.
Right. So I got a call from the FPA, and at their national retreat, it was in Oak Brook this year. And so it was their residency. It was their high level one. And they were like, hey, Dr. Lemoine, somebody can't make it. You're down the street and we know you talk about AI.
Yeah.
And I was like, yes, sir, I'm coming. So I drove up, like they let me know Monday, and I was up there Wednesday. And I in a past life, I owned a CFP review with a buddy, and we wound up selling it to Dalton. But at the time, it was kind of fun, and I retained some of the questions there. So I had tweaked them and some of the CFP exam review questions, right? And so, and as I was closing out at FPA, I was like, let's see how we do with the CFP exam. And of course, it nailed it, right? And so I always like to go back to that example that like, these are pretty complicated CFP questions, and AI tools are just like instantly getting them all right.
Yeah.
So I think to that end, let's flip back a minute to where like, you know, the technical's being done quickly, and what does that let your team do better?
It allows my team, like what I want my team doing is having more client conversations.
I love it. I love everything about that.
Right.
Answer.
Building those relationships, because that's the most valuable part of this business.
Yes.
Is building the relationships with the clients. And that allows us to deepen those relationships, have those clients potentially refer more business.
Yeah.
And then thinking higher level around other things that we can be doing for those clients proactively. Like we don't want clients, sometimes clients reach out to us and ask us for things, but the best thing is when we're proactive.
You're getting ahead of it.
We're getting ahead of it, yeah.
And I think what AI allows us to do, and I'm going to group in that fintech tools, although I know, language learning models probably a little different, but
yeah,
I think what all this has let us do is where, to go back to the start of our conversation, I would be like, okay, here's your IRA and here's your asset allocation.
Yeah.
And let's get you set up for the short term.
Yeah.
Right? The short term.
Yeah.
So we'd invest for that short term. And it took so much time to just do the short term. And I think what fintech and AI has let us do is now your team can think, okay, generationally, where's your wealth today? Mm-hmm. Where is your family headed? And where can we kind of plan 10, 20 years out and generational wealth and transferring the wealth and making sure that your goals and values are being met and you're being heard and your kids are in that process when they're adults and that whole conversation. I think the idea of generational wealth planning, we wouldn't be able to do it without giant long-term teams or the tools we have today. It's kind of where I've landed.
Absolutely. I mean, having that vision and helping clients see that vision or helping them imagine that vision themselves through the tools we use. I mean, one tool that we use all the time and have been for a long time is eMoney.
Oh, yeah.
And it's amazing because you can get all their information.
Sure.
They go to one spot, they can see everything, but eMoney has the tools to show them what their financial life looks like 10, 20, 30, 40 years down the road, what things look like if they pass on their money to the next generation.
And it's also seamless.
Yeah.
In a good way, right?
Yeah.
So then it lets your team focus on what's important to mom and what's important to dad and what's important to the adult kids.
Yeah.
And then they're not going anywhere.
Absolutely.
Right?
Yeah, because you build relationships. I mean, I have relationships where I have the parents as clients, the grandparents as clients, the kids, and now we're setting up 529 plans for the grandkids.
So you've got
That's 4 generations.
4 generations and all that kind of coming together with tools that you're using.
And to your point earlier, like, is the advisor dead? You asked that, right? Is the financial
That's
planner
where I
dead?
started.
And I was thinking about that as you were talking, but the reason that the financial advisor is not dead is because things are getting more complex, even with AI tools.
Sure.
But the reason that clients come to us more often than not is because they just want one person to talk to that can help oversee everything and simplify their life.
Sure.
Right? Even though it's going to be complex, because the more money you have, the more complex your life is typically,
generally,
unfortunately. But they don't want to go out and ask the AI tools what to do and figure out if that's the right advice. They're okay with us doing it because it makes our lives easier. But having that one team to talk to is really, I think, the huge value add to be able to provide that smart advice.
Well, and I think also having the team as sort of the intermediary between tools and action.
Yeah.
Right? The execution of advice happens with your team.
Mm-hmm.
The taking what could be 1,000 possibilities and picking one happens with your team and with them.
Making the decision.
But, at the end of the day, you're able to access more, deeper, quicker, but you're still the expert in the head of that.
Yeah.
Right. And so I think to some extent, I could, the analogy I've heard a lot, well, just to use financial planning, right? I could look at ChatGPT today, they're open source, right? And I could put some facts about myself, maybe change my name, birthday a little bit, but I could put some facts about myself and I could say when I want to retire and I could say, well, what should I be invested in, right? And it's going to come back and it's going to say, I'm not an investment advisor, but, and it's going to give me some securities that would create a balanced portfolio. And based on whatever risk information I give it, it's going to skew it one way or another. But am I confident that that's the right thing, or do I want to talk to an expert first?
And do you want to take the time to implement
it? Do I want to take the time to implement
it?
Do I want to go to the expert? Do I believe it? And I think we're still at a point, like with a little bit of WebMD, where, if I have a cough, I can like give the symptoms of my cough, and it can be like, you probably have pneumonia, you have allergies, but I want a doctor, right? Like, I'm not going to just be like, well, it's allergies, it is, right? That's not what I want to do. So I think we're there with finance, with personal finance. Yes, ChatGPT can help anyone budget. It's a great tool for that. Yeah, it can give you some baseline investment decisions. But at some point, I think, especially people with more wealth, really want an expert.
They want an expert. They want somebody to talk to. They want a therapist at times. They want somebody to implement that advice. They want somebody to talk to their kids, all that.
So that's where I think the advising moves, which then asks some questions of, if we're going to keep looking at things like a CFA and a CFP, I think the underlying body of content there starts shifting a little bit, though.
Okay.
I think we have to include more therapy, counseling, conversation in there. I don't know.
Absolutely.
Just kind of where we go.
Yeah, absolutely. Having those conversations with clients is one of the most valuable things.
The most valuable.
Role, maybe, the most valuable thing as an advisor.
Oh, I think it is, because I think it keeps them moving towards their goals and their futures. And I think
but that too, but it also, like, I had and this is a fairly typical conversation I have with clients. And this is one thing I've learned in the industry. And I could kind of feel this myself because, I'm an immigrant. I came here with nothing. I had to figure out how to make, have money and all that and have a career. So a lot of the clients that I have, they're first generation wealth builders. So they came from nothing. So a lot of that anxiety that they've carried with them their whole entire lives to build that wealth, to save money, to get them to the point that they're at today, can't just be re-engineered away.
No.
Right? They're 60 years old, and all of a sudden they're staring at their account. They have $5 to $10 million.
Yeah.
And they're still paranoid about not having enough money.
Of course they are.
So one of my biggest roles, and I think one of the biggest things that I provide clients, is just telling them you have enough.
Right.
And sometimes they're going to forget 24 hours later, but then they can call me and just have them remind me.
But I think you're selling yourself a little short.
Yeah.
And I think they're trusting that you are an authority to tell them they have enough.
Yeah, that's true.
And all that you've put in your career got you there.
Yeah.
Right? Is they're going to call you up and be like, oh my gosh, I'm worried. The world's changing around me.
Yeah.
Markets dropped 2% today. This
Yeah.
property that I owned, no one's renting it right now.
Yeah.
It has a leaky roof, all the things that people talk to. But your experience to get where you are today in that chair lets them call you and actually believe in what you're telling them.
Yeah.
Right. And I think that's kind of the difference between them plugging it all in ChatGPT and ChatGPT going, you have $7 million. You're fine. Draw 4% of it out forever. You'll be good. I think where the human advisor comes in is they trust you, right? They believe in you. They believe in what you have to say.
That's right.
And I think you've put a lot in to get there. And so I think don't sell it too short, right?
Yeah.
Like there's a lot that goes into you, someone trusting.
I appreciate you adding that plug.
It's true though. I think, but I say that plug, but I say it for a lot of advisors, right?
Yeah.
AI is good at scale. It lets us do some of these base tasks, but then, it's up to us to build the trust.
Absolutely.
So I like that. So, I think one other kind of comment on AI is like, you don't need to be too into tech to use the tool.
That's true.
I kind of like that. That we can type.
It's easy now.
It's easy now, right? And I think if you go back in financial planning, I don't know if you were a Navaplan person back in the day.
Never used Navaplan, but it was probably super complicated.
There were a lot of inputs and a lot of assumptions you could change. Maybe you shouldn't change. Maybe you could change. And I think today, one of the beauties of tech tools is we don't really want our team spending that much time on it. So we try to make it as easy as we can. And Copilot gets pretty easy to that end.
Oh, super easy.
I love that. So let's kind of pivot if you're okay with it. This is land and everything else. So let's talk a little bit about trends.
Sure.
Let's talk about what you see in the alt space. And there's no wrong answer here.
Well, I've had a pretty good view into the alt space because I've been with Vivaldi for... This is my 11th year, maybe going my 12th. We were really the leaders in the alt space when it came to being able to provide alternative solutions, including real estate, private equity, venture, private credit, and hedge funds to high net worth, ultra high net worth individuals. For the majority of the history of alts, the institutions, the people that, or the areas that were invested into alts were mostly institutions, endowments. You heard David Swenson from Yale, the chief investment officer, really kind of navigated that trend for endowments. But we helped break it down and provide access to clients that might not have endowment institutional money, and then eventually to even retail clients. And it feels good to have been a leader in that space and seen that trend. And now what you're seeing the mega institutions like Blackstone.
Sure.
Apollo and other folks like that starting to go into that space. Schwab just partnered with iCapital to offer alternatives to their clients. So the space is growing, and more advisors and clients want to get into it.
You're seeing in the farmland space specifically this month alone, we've had two relatively large platform acquisitions, Acre Trader being the more commonly known one, being purchased in that private space. So now maybe making it a little more accessible. But you can see a demand there for alts. And I think as we start seeing 401k plans maybe able to offer some of this stuff, that would be even more demand, right?
Well, speaking of that, so one thing I wanted to mention is we have like 5 or 6 former students of your program working for Vivaldi. And Ben Blumen, I'll give him a shout out, actually. He heads up our 401k business now. Yeah. And he just sent an email about some of the changes that are going out in Washington with the push to make access to alternatives more available within 401ks.
Now, I think when we look at alts, one of the big questions that I've been tackling in my head, maybe you can help me make sense of it a little. Just with land, let's just start with that. Not even real estate, right? Not even anything on it, right? Okay. So many ways to buy it, right? You can buy land. You could just go buy 100 acres and crop share, right? Yeah. And just own it and someone else farm it. Yeah. You can buy a REIT. Yeah. You can become a limited partnership in a farmland offering. Yeah. So many ways to buy the asset class. Yeah. And it's even more complicated with real estate, right? Yeah. Because I could buy the building. Yeah. You and I could buy the building together. Yeah. We could be limited partnerships in a larger building. Yeah. We could buy a REIT. We could buy a hedge fund that buys the property. We could buy a hedge fund that buys the limited partnerships. Yeah. We could buy shares of a private equity firm that buys rental houses, right? Where on earth, how do I sort through that?
Yeah.
Right? If I believe in the asset class, it's I guess with public markets, you believe in the asset class, it's pretty standard ways in, right?
Yeah.
ETFs, funds, or stocks, right? But I feel like in the alt market, there's like so many different ways in. How do I even sort all that out?
Well, it is a lot. And that's why we have a 20-person, our partnership with First Trust, there's a 20-person research team that helps kind of do the initial due diligence, the monitoring, to ultimately bring what they approve onto our shelf.
Sure.
But then I have to understand it. And there's so many offerings.
You do.
Right? We have access to public markets through Vanguard, publicly traded real estate ETF, mutual funds. We have private real estate investment trusts, limited partnerships. So my job is to understand it. And I've spent a lot of time in real estate. I think I understand it pretty well. And then understand the client, what they're looking for. Are they looking for...
And I think there's your answer.
It's really, it's that marriage of, is that client looking for income, total return, a combination of that, and then structuring a very customized portfolio where real estate could be a 10 to 20% allocation.
Oh, yeah.
And then within that, how do we, what do we bring into it to accomplish that goal for the client?
So I think you answered the question. It's a marriage of offering, understanding, depth of knowledge, which is what the team brings, and understanding the client goal. And I would add to your client side how much time I want to spend and how much risk and liability I want.
That's right.
Right? Because we're not, my 87-year-old father has no business buying an apartment building. Right? But is real estate an important part of his portfolio? Yes, the income from real estate is going to be diversified, different than bond income, and different than pension income. So like having the piece is good, but Bill has no business owning an apartment complex. So I think, whereas if you and I decided, hey, let's buy an apartment building, maybe there is some value to that, right? So I just think that marriage answers the question really nicely.
Yeah, for sure.
I like that. So, I think that trend is there. We've seen...
I could talk about another really interesting trend.
Hit me with trends.
The biggest trend that we're seeing right now, that I'm seeing in terms of business, is if you look at where public markets were decades ago, there were a lot more companies in public markets. Companies are staying private for a lot longer.
For reasons.
For several reasons. So regulation's one of them.
Yes.
But even more importantly, it's much easier to raise capital that you need in private markets. So whereas, Google, I can't remember what the valuation of Google was when it went public, but nowadays Google wouldn't have gone public at the same time that it did 2 decades ago, right? So now getting access to private market shares is a very big value add for certain clients. They want access to these tech companies
early on.
Well,
OpenAI being a good example of that, and SpaceX too.
Yeah, so we have access to, we're constantly providing clients access to SpaceX. We just did a capital raise for Anthropic, which is a competitor to OpenAI. I mean, OpenAI is doing around $500 billion privately.
Okay. Yeah,
isn't that wild?
That's crazy.
Yeah. So, and you have primary rounds where these companies are raising shares because they need the money for operations to grow. But then you have companies like SpaceX that SpaceX is a very profitable business. It doesn't have to go out and raise capital to run operations.
Okay.
But what does need that the public markets had once provided, but now private markets can create, are tender offerings for employees to be able to liquidate shares.
Got it.
Right. So imagine you're an employee, all of a sudden you own shares of SpaceX. It's gone up 10, 20, 30x, and you want some liquidity.
Sure.
Historically, you wouldn't be able to do it. Now, we help facilitate tender offerings to some of our partners to buy shares from employees that want to reduce their exposure.
And so it's basically raising capital on demand as opposed to going through the IPO or secondary offering process, which is complicated, expensive, and then maybe we have too many hands in that pie for cash, right?
Exactly.
So we're gonna do a $50 million offer, $100 million offer when really all you need is 10.
Exactly.
So I think there's that, and from a regulatory standpoint, I mean there is less accounting demands and things on private equity.
Less accounting demands.
So I like that trend. That's very interesting to see, and then being able to provide that as a firm is going to get you, I think, probably a different sophistication of customer. Coming in the door.
Yeah, I mean, I have two effectively within my wealth management business, I have two types of clients. I have the full wealth management client that come to us for everything, full asset allocation, planning, all types of planning, estate planning, retirement planning. And I have some clients that don't want any of that stuff, at least not at the onset, but they just want access to investments that they otherwise wouldn't be able to get on their own, or at the terms that we're able to get because we're investing a tremendous amount.
Right. So
economics are better.
Your economics are better, right? As opposed to more people taking a cut of that.
Exactly.
Oh man, that's I love that
perspective. It's a very exciting space right now.
That is an exciting space. Yeah. And then I guess, to that end, I'm not saying, we're seeing the death of public markets, but I do think you have fewer IPOs.
For sure.
On a major scale.
Yeah, there's definitely less IPOs than we had
And
before.
so I just love where this is going. So AI, alts, trends.
Yeah.
Man, what a fantastic conversation today.
It's a fun time to be in the business.
It is a great time to be in the business. And I guess one more question for you.
Yeah.
And we're going to have some more fun after that. What advice after our conversation today, what advice would you give a 22-year-old with an eye for this profession?
Well, even before 22, I would say definitely go to one of these great programs that are out there now that were not available when I was going to college.
That's true, isn't it? Yeah, I hear you on that.
Yeah. So, I mean, you've put together a wonderful program.
Well, thank you.
Like I think I mentioned earlier, we have 5, 6, maybe 7 associates that have started as interns. Some of them came in immediately after. Some of them came a couple of years after. That helped me run my business. But I knew that when I hired them, I knew that there was a high probability this is what they wanted to do for their career. Because they dedicated their time to go to a planning program.
Right.
You provided them the skill set to be able to hit the ground running as soon
at least to hit the ground learning.
Hit the ground running. But some of them are running.
Yeah.
Because, they're ready to take their CFP.
That's good.
So maybe my best advice that I can give maybe my 2 sets of advice that I can give to anybody is go to one of these planning programs.
Sure.
Because we don't hire anybody outside of these programs anymore. Right?
Oh, I love
it's too much of a chance.
That's true.
You're taking too much of a risk on somebody.
You are.
And there's so much good talent coming in. And the other one is become an expert in AI. Because if you're not an expert in AI, and if you don't master AI, AI might master you at some point.
And we do incorporate AI in the classroom. One of the fun things we're going to get to do this fall is CFP Board's having a big event in Chicago.
Yeah.
And I've been fortunate enough to be selected alongside Presley Fee to give a talk on AI in the classroom.
Okay.
And so, it's kind of this concept of building AI in or building AI out of assessments, right?
Yeah.
And so we're striving to find ways to build AI in to their assessments and get a little deeper in learning. Quick example before we go. So one of I have them in our in our capstone class. We talk about what is risk and investment framework risk. And then we talk about how do we measure someone's risk.
Yeah.
And then we have them use AI to create a risk tolerance questionnaire. And then we compare what they've created to some that are just out there on the market or on websites. And we say, well, what you created versus this. And then we kind of help them prompt a little better to recreate something, right? That's maybe a little more concise. Mm-hmm. But, so that's like level 1 AI. But then the cool part about the conversation is then we have them answer the questionnaire as though they were a client. We have AI spit out a portfolio, and then we have them analyze, okay, what would you do different or the same as this portfolio, right? So in one lecture, we've got them using prompts, creating a risk tolerance tool, using better prompts, refining it, answering it, coming up with a portfolio, and then discussing the securities in the portfolio. All that, I think, is a good example of building AI in, right?
You have to.
So everybody in that room gets experience that day with how we've done it. And I think we have a better conversation about investments at the end of that day than we would have if I had just thrown a portfolio on the whiteboard.
Absolutely.
So
they're not getting ready for the real world.
Right. And that to me is an example of trying to build it in. So we're trying to build it in where we can. But I'm really glad you brought that up because it's good to share that on our podcast. But thank you so much for coming today. This was so much fun. And I love that we're going to launch season 3 with this episode.
That's awesome. I'm excited.
All right. Thanks, man.
Have
a good one.